Hello and welcome to Pro Trader Strategies Market Commentary for Friday, Unenjoyment Friday, January the 8th. My name is Eric Wilkinson, and you very well may recognize me as the Wolfman from mainstream media, where I've talked about the economic data, the geopolitical environment, and how that comes in to impact markets with some of my market analysis. Yes, and we do have a lot to talk about these days with the geopolitical environment, at least here in the United States. But without further ado, let's get on with the economic data, see how that's going. Across the pond, we got German industrial production. They ramped that up a little bit to 0.9%. It was expected to be 0.7% and a nice revision to the previous month's number to 3.4%. Good to see there. One thing we did also see is industrial production out of France. Now remember, these are the two main industrial sectors of the European region, Germany and France. And industrial production came off a little bit down to negative 0.9, I should say. It was expected to be a -1. A revision to last month's number a little bit higher as well. But remember, we're coming out of that holiday season, so we generally would expect to see maybe a little bit of pulled back there in industrial production. So that's why that number was negative versus the Germany being a little bit more positive. But still coming off those levels that we've seen the previous numbers heading into the holiday season. The consumer spending, though, out of France consumer spending coming in at negative 18.9. It was expected to come back down a little bit from, but a negative 15.8, just really missing on that one. Though they did revise last month's number up, albeit slightly, on the consumer spending side there. Finally, let's move back over here to the United States and talk about Unenjoyment Friday, right? What happened in the markets today? We got a bit of a whipsaw, not really geopolitically speaking there. You know, that is a lot of noise right now. I think it's really being overdone in the news in a sense. No, I'm not saying that storming of the Capitol wasn't newsworthy. What I'm saying is the whole we got to get the 25th Amendment. I mean, it's 12 days. That's why the markets aren't really reacting to that. They know that it's really no big deal. So is the way that I'm reading the markets anyway. All right, so let's talk about the Unenjoyment Friday. Hourly average earnings ramped up to 0.8%. It was expected to be 0.2%. That's really good to see because we haven't been seeing a whole lot of hiring going on. Now that we've gotten the stimulus package, the PPP also going to these businesses, all of that being said, we probably see these numbers start to come back. And I think that that's what's happened here in the markets today because non-farm employment change came in at negative 140,000. It was supposed to increase by about 60,000, well off those highs we were seeing before, but they did revise last month's number up to 336,000 hires. So a slight revision up there. That is nice to see, but big miss by 200,000 on the non-farm payroll change. Albeit the unemployment rate did downtick a little bit. I don't think that that's exactly what we were seeing. The reaction in the market, I think that the market was saying, hey, you know what? I mean, of course, these people are struggling. Small businesses are struggling, and they didn't get that money in time, and they had to do something. So I think a lot of people got laid off right after the holidays because people weren't expecting to get the checks, really, or weren't able to. So wholesale inventories unchanged, no drawdown. They were expecting a small drawdown of about 0.1%. All right. Let's get on with the overall markets. Crude oil continuing to move higher. I told my wife she can actually fill up her car now. So I guess I'm getting long crude oil synthetically. So crude oil moving a little bit higher today. Look at gold. Oh my gosh, just a rip your face off, falling out of bed, down $57 today. Well out of that 1900 handle. That was really short-lived. Another thing I was bit corrected on this charting thing, and it makes a whole lot of sense right now. You know, that's why I probably shouldn't try to figure out charting as I am shooting from the hip with the charts there. Where is it? Oh, it's hidden back here. Sorry, there. I'm looking for this because I wanted to draw something up on the screen. And let me get the pen here. So we are on red. Let me go to a white But basically what we're looking at, I'm not talking about this, but the move higher here. So we've got there's one, actually one, and then two comes all the way down to here. 2, 3, 4, 5, and then 1, 2, 3. So that's kind of what we're looking at there. So that's yesterday I was talking about thinking it was going to continue at a pattern where we were going to kind of continue moving that way. But that is not clearly the case now. Breaking back down even below where our support line is right here as well. So keeping an eye on that. That market looks like it is not going to retest 1900 anytime soon. All right, and then let me try and see if I can get it back around there. Oh, move out of my way. All right. Bonds, they're continuing to slide as well. Interest rates looking like they're moving higher as this market goes down there. I said, it looks like we're going down to test that 167, and we are only about a point and a half away from that. So it definitely looks like it's going to go there. The momentum on this is not slowing up anytime soon, but I do think that we will slow down in and around this area for at least now. And of course, I believe that the market should be going higher, but it looks like the interest rates are on the move to the upside. All right, VIX. VIX is off a little bit today. The market's moving nicely higher, generally speaking. I guess, actually, even the S&Ps and Dow Jones made their overnight highs. You can see Dow Jones Industrial Average off by about 50 points, but that's not really a major correction there. NASDAQ did make this high intraday, up 100 points on the day, and E-mini S&Ps peaking into positive territory here, up almost 10 points on the day. That was an overnight high. We'll see that show up here in the breakdown of the E-mini S&Ps here. You can see that overnight high coming into today. People got flat because they knew we had our non-farm payroll. Well, whap. We got the non-farm payroll, fell out of bed, but then I think people realized, hey, you know what? We are in a pandemic. Those people were hurting. They now have their money, so these are futures forward looking. It looks a little bit better. So I think that that's where we got that rebound from, is the realization that, hey, that's kind of expected, really. All right, what have I done? Well, I'm looking at the charts. I probably should start out. Let me start out with Coca-Cola first, and because this is the perfect setup. So I had to jump in on Coca-Cola for a trade today because of this setup. This is like how you draw it up. There we go. How you draw it up. I mean, this is beautiful, right? Where the market really slapped people in the face right here, where it looked like it was going to have a bit of a bottom there, but broke that pattern. Something to note, though, we did cover that gap with this move to the downside. So now we've got this nice little doji at the bottom. That usually signals a bottom. Well, yeah, it broke up here. That's about the same pattern there, but then it broke. It wasn't ever confirmed. Now, obviously, I always get in a little bit early, but it's not necessarily quote unquote confirmed at this point, but we are above that. So that is how somebody would write up a pattern for a buy. I'm just telling you, even like Steve Primo's stuff is probably calling for this kind of a bottom. I mean, this is a beautiful setup that you don't often be able to get to see, where it covers the gap, finds that bottom, get that confirmation. I think this market is moving at least to the upside. I should have that in green. I think we're going to start moving up. Now, we do have an earnings in there, and I don't usually like to jump in on something like this with earnings right around the corner, but I'm going to play this for a quick move. Despite having said that, let's look at the internals around this. We can see that we have pretty much low volatility. Volatility, I do expect to start to expand here. Now, the calls, if I were going to buy calls, I'd probably be buying calls way out in this area. But I decided I wanted to create a move that will track what the underlying is doing. So I went in and did the synthetic long Coca-Cola, all right? And how we do this is the volatility. I'm counteracting all the volatility because I'm buying one and selling another. So in this strategy, I went out into the March, and when you're trying to do this to get it to track, we're basically building it for 100 deltas as well. So when you're buying the calls, right, and I'm buying the March 50 calls, so I bought the March 50 calls. Now I go then and sell the March 50 puts. All right, now higher risk strategy here. Now there are like poor man's covered call strategies that I use also. This is like going out and buying the stock for a lot less money. All right, so for every, you're buying one, and this is basically when you buy the 50 calls, that's a 50 delta here. And when I'm selling the 50 puts, that's selling 50 deltas, and that makes, when you sell 50 negative deltas, that makes that positive, right? So now I am totally long 100 deltas for every contract I do in this underlying, and I did it for a debit of like 18 cents. All right, so it was a debit of 18 cents. Now you can see when I did this, the underlying was trading right around in here. So it hasn't made any move since I put this trade on. But you can see when I bought this, I bought the 50 calls, sold the 50 puts for 18 cents. And really what that's saying is I'm buying the underlying. I bought the underlying at $50.18. So that's where I am long synthetically. So for every, penny dollar move higher, every dollar move higher, this position will increase in value by $1. For every dollar move lower, this position will lose by $1. All right. This has unlimited potential to the upside, but my risk is that this underlying goes to zero. All right. Now, I don't think Coca-Cola is going to do that, and I'm not going to probably play it that long, even in through earnings, but I want to take advantage of this little bit of a bottom pattern that we have setting up here. All right. So let's talk about now. So I've got that synthetic long on Square. We're outside of the earnings. So, that's one of the problems we're having right now, or at least I'm having, is the fact that we have earnings right around the corner. I want to keep money on the table or in my account ready to allocate for these earnings trades that are right around the corner. All right. So, I don't want to add a ton of positions, which is kind of another reason why I've been sitting on my hands as well. But Square has a topping pattern that is the flip side of what we saw there in the Coca-Cola trade. So with this one though, we got the earnings outside there. I'm able to get outside and into this March contract. So going into that earnings, I think that this March contract will start to see this volatility expand, right? So I want to take advantage of that with this trade. If we pull this up, the beauty in this is we can see that the premiums in these options are seriously cheap when we're looking at implied volatility. That tells us how much those premiums are. So I'm looking at this and saying, hey, these are really cheap premiums. So I need to be thinking, all right, well, I should buy an option. Now, my directional assumption on this now is negative, right? So I feel like this is making a top. It's having that other flip side topping pattern where we've got this doji, and what I'm looking for then, Monday or coming soon is to get a confirmation. Now, most people who have a less appetite for risk would probably or should probably wait for a confirmation. I'm early a lot of times. Coca-Cola, I feel like I'm a little bit early because it's not quote unquote confirmed at this point. But again, with this one, stepping out a little bit. So I went into the March in this trade. So I did the March. I bought the 220 puts in there. All right. So I bought the March 220 puts for $13 and I think 35 cents or $13.05. All right. So got out where theta is going to be limited a little bit more, right? Gives me a little bit more time. I should see that volatility expanding there. So any type of correction here, that directional move will help me. Volatility coming back kind of like towards the median or ramping up at least into the earnings is going to help me with this trade as well. All right. So that's all I've got for you guys today. Thank you for sticking around for that. All right, so webinar went off really great, our roadmap to trading options. I dig into these option strategies a little bit more than what I've done. I've kind of gone a little bit into detail here, but you're going to learn a whole lot more in these webinars because we really drill down onto some of those nuances and make it so that you understand this stuff intuitively. All right, so check those out and give me a comment what you like about those videos. I'd love the back and forth. If you have any questions, feel free to reach out to me. Comment in the bottoms here and share it with a friend. That's the best form of flattery there. Finally, make sure you take a moment to go over our site disclaimer here, as we're an educational company. I am not trying to get you guys to do these trades that I'm doing. I'm just using these as examples for you guys to understand how we should follow simple rules in order to be successful and keep it mechanical. All right, that's all I got for you. Other than if you can't take that, take it easy.